Well, the market last year clearly took great fright at the whole spectre of a global slowdown really being accelerated by difficulties engendered by the trade tariffs potentially coming into play. And it's very true that you should really see this as almost a war and broken up into battles. And the battle in the first instance is likely to be won by the US because the trade balance between the two countries is in favour of China, so they have the most to lose. But on a sort of foregoing basis, it's certainly the case that markets will become concerned that we have a sort of structural deglobalization as a result of this. So what we've tried to do is avoid those companies in China which have exposure to the US consumer, and we've also, to some extent, brought down some of the global cyclicality within our portfolios.
What happens if nothing happens? What happens if we can't make a deal, we go to March 2nd, and there's a 10% to 25% move on $200 billion in goods coming from China? What if we don't get anything done and tariffs spike? What happens to the equity market?
I think that the general mood will be to expect some percentage chance of that happening. I think for it to happen without any successful last-minute proposals by the Chinese, which have been happening in recent days, would be taken disappointingly nonetheless. So I'd expect markets to come down on that news. I would expect there to be some very specific sectoral impacts, not least in those areas which are related to Chinese infrastructure and consumption. And of course, global cyclicality, which has already been to some extent before a much better run in January, will be viewed more negatively because this will be seen as an accelerator to a potential cyclical downturn in the global economy. So I think it's hard to make a positive case. I think if we see some kind of small move forward, I think markets will like that. But I don't expect to see any major breakthrough in the near term.
Okay, when you say you expect the markets to move down if no deal is reached, is that a trip or a tumble? Is it stocks fall a little or stocks fall a lot?
Well, what we've seen so far is that any weakness in global markets has been met, certainly before the fourth quarter weakness that we saw, by an expectation that the authorities will come to the rescue and start to stimulate or slow down stimulus. And certainly the Fed's tone this afternoon will be crucial in that. So far, it's sort of paid generally to buy the dips. As the long cyclical upturn that we've seen, very slow but upwards direction in economies, has happened since 2009, it's generally been the case that markets have recovered from these situations. But that's been quite a long bull run for the economy and for the market. So it may be that markets need a bit more convincing than small steps forward. But I think if we see nothing and we see some kind of a setback, it could be a pullback of the equivalent nature of that which we saw in the fourth quarter of 2018, I think.